On October 17th, 1973, the most powerful weapon in history wasn't a bomb or a missile, it was a pipeline valve. That day, Arab oil ministers gathered in Kuwait City and made a decision that would reshape the modern world. They would cut oil production by 5% every month until their demands were met. Then they went further. A full embargo against the United States and the Netherlands. Within days, the price of crude oil jumped from $3 to $5 a barrel. Within months, it would hit $12, a 400% increase. The United States, the country that had won 2 world wars, put men on the moon, and built the largest economy in human history, was about to be brought to its knees. Not by an army, by a commodity. To understand why this happened, you have to go back 3 weeks. On October 6th, 1973, Yom Kippur, the holiest day in the Jewish calendar, Egypt and Syria launched a surprise attack on Israel. Egyptian forces stormed across the Suez Canal. Syrian tanks rolled through the Golan Heights. Israel was caught completely off guard. For the first time since its founding, the country's survival was genuinely in question. Then, America stepped in. President Nixon authorized Operation Nickelgrass, an emergency airlift of weapons, ammunition, and military equipment to Israel. Over 11 days, the US flew 22,000 tons of supplies into Tel Aviv. Israel turned the tide. The Egyptian army was pushed back. Syria retreated, but the Arab world was watching. The Organization of Arab Petroleum Exporting Countries saw Nixon's airlift as a declaration of war against the Arab cause. Saudi Arabia's King Faisal had warned Washington for months. Keep arming Israel and there will be consequences. Washington didn't listen, so Faisal did exactly what he promised. Saudi Arabia, the world's largest oil exporter, led the embargo. Libya, Iraq, Algeria, Kuwait, Abu Dhabi, Qatar, and Bahrain followed within days. But this wasn't just about anger. This was about power. For decades, Western oil companies, the so-called Seven Sisters, had controlled pricing, production, and profits. Arab nations got pennies, while Exxon and Shell made billions. The embargo was the moment the producing nations said, "We control this resource, not you." The impact hit America like a freight train. Gas stations that had been open 24 hours a day suddenly ran dry. "Sorry, no gas," signs appeared across the country. In state after state, governors introduced odd-even rationing. If your license plate ended in an odd number, you could only buy gas on odd-numbered days. Even days. Lines stretched for miles. People waited 3, 4, 5 hours for fuel. Fistfights broke out. In one incident in New York, a man pulled a gun on another driver who tried to cut the line. The highway speed limit was dropped to 55 miles per hour to save fuel. Daylight saving time was extended year-round. President Nixon asked gas stations to stop selling fuel on Saturday nights and Sundays. Christmas lights were banned in some cities. The White House itself went dark. No decorations, no lights on the national Christmas tree. America, the land of abundance, was rationing energy like a nation at war. But the gas lines were just the visible symptom. The real damage was happening inside the economy. When oil quadrupled in price, everything that depended on oil, which was everything, got more expensive. Heating bills doubled. Food prices spiked because trucks needed diesel. Airline tickets surged. Plastics, chemicals, fertilizers, all petroleum products, all skyrocketed. The stock market crashed. The Dow Jones fell 45% between January 1973 and December 1974. It was the worst bear market since the Great Depression. Unemployment rose. Factories slowed, but prices kept climbing. Economists had a word for this impossible combination of stagnation and inflation. They called it stagflation. The post-war economic miracle, 25 years of uninterrupted growth, was over. And it ended not with a crash or a war, but with a phone call from Riyadh. The embargo officially ended in March 1974, 5 months after it began. But the world it created was permanent. Henry Kissinger flew to Riyadh and struck what might be the most consequential deal of the 20th century. The United States would guarantee Saudi Arabia's security, military protection, weapons sales, political support. In return, Saudi Arabia would price all its oil exclusively in US dollars. This was the birth of the petrodollar system. Every country that wanted to buy oil now needed dollars first. That meant buying US Treasury bonds, which meant lending money to America, which meant the United States could run deficits that would bankrupt any other nation. The petrodollar didn't just save the dollar, it made it the unchallengeable reserve currency of the world. America's greatest financial advantage was born not from strength, but from the crisis of 1973. The crisis transformed the Middle East overnight. Saudi Arabia's oil revenue jumped from $4.3 billion in 1973 to $36 billion in 1977. Kuwait, the UAE, Qatar. Tiny desert nations became some of the wealthiest places on earth. This money had to go somewhere, and it went to Wall Street. Petrodollars flooded into American banks, who recycled them as loans to developing countries in Latin America, Africa, and Asia. These loans would later trigger the 1980s debt crisis. But that's another story. At home, the crisis launched the modern energy industry. The Strategic Petroleum Reserve was created. America's emergency oil stockpile, still used today. Fuel efficiency standards were born. The Department of Energy was established. The entire concept of energy independence entered the political vocabulary. The 1973 crisis wasn't unique, it was a template. In 1979, the Iranian Revolution triggered the second oil shock. Prices doubled again. Gas lines returned. In 1990, Saddam Hussein invaded Kuwait and oil spiked 40% overnight. In 2008, oil hit $147 a barrel before the financial system collapsed. Every single time, the pattern is identical. A geopolitical event disrupts supply. Prices spike, economies stagger. Politicians promise energy independence. And then, when prices drop, everyone forgets. The lesson of 1973 is not that oil is dangerous. Everyone knows that. The lesson is that we consistently refuse to act on what we know. Right now, in April 2026, the Strait of Hormuz is closed. 20% of the world's oil passes through that waterway. Crude is trading above $90 a barrel. Gas prices hit $4 a gallon in March. The 1973 crisis taught us that oil is the most dangerous weapon in geopolitics, that whoever controls energy controls the economy, and that the price of ignoring that lesson is always paid at the pump by ordinary people, not by the politicians or the oil executives. 53 years later, we are still learning the same lesson. If you want to understand where the global economy goes next, study 1973. Because history doesn't repeat, but it rhymes every single time. Subscribe to Compounding Crow. Because understanding how money works is the first step to making it work for you.